My first Capital Market Day. I hope it will not take another 3 years to get one. Hope to see you earlier than in 3 years' time. I will give you an outline how we grow and how we create shareholder value. We maintain laser focused on optimizing our capital allocation. We grow by our fair value pricing. That means that we enable our customers with tools, giving us the opportunity to reprice price with inflation and GDP growth into account. A very important part of our strategy. And also we run lean operations in your parent companies, but also at the center. As we communicated with you earlier, our run rate of the center HQ is around about 85 million. And we have around about 80 million interest burden after we repaid a big part of our debt. So we run it with around about 160 million. Big improvement after our reorganization last year. In combination with what Kaam mentioned, the organic growth part, the accelerated growth with our DO 4040 strategy, and our strategic transactions, our strategic activities, we will be able to grow shareholder value. With those strategic activities, unlocking value, we talked about selling towers, IPOs, really optimizing our organization. That combination will bring us to optimize our total shareholder value. We will optimize it in such a way that we can deliver the growth to yourself. Good to know that management, all the management you will see on stage today, but also the executives who you will not see and top management in the group are rewarded in such a way that they also feel the pain and the benefit of being a shareholder. The reward is also based on shares. We have skin in the game. Over the last quarters, we have been listening to you. We've listened to your ideas. We have listened to your thoughts, wishes, sometimes also demands. You've shared with us that you want to be part of the growth and you want to see us being a growth stock. Others of you told us we want dividend. And others said, can you not start the share buyback? These are all things we take into account and we will come up with ideas to let you share in the growth of our company. We know it's important, not only for you, but also for ourselves. We will come up with a planning in that sense. In addition to the growth story, we also are optimizing our balance sheet. Over the last years, we did not attract new capital, new debt. We really paid back a lot of our debts based on selling part of our assets. And here you see the overview of companies we sold to repay the debt. Large amounts, Algeria, of course, but also don't forget Russia. Selling Russia led to a much smaller company, but much faster growing company. And as a result, you see how we deleveraged. From more than 7 billion debt to 2.7 gross debt. 2 million net debt. And we deleveraged to 1.5 times. Strong performance focused on optimizing our capital and our debt structure. Going now to our numbers, Q1, you see growth numbers, 11.6%, total revenue growth in local currency, 6.6%. Kaam already mentioned, if we would include the cyber attack impact in Ukraine, we had to add 46 million. That will bring us to 20.5% local currency growth, 15% dollar growth. But it will also bring us to a company close to $1 billion revenue a quarter. Don't forget, we are an $11 million revenue company a day. At the end of this day, we've earned $11 million. Included in the overview, you see the impact of FX differences. Over the last years, they were significant. That can show you negative dollar-related revenues impact. We see now in those coming first months that we really have tailwind from the FX impact. That's a good sign. On EBITDA, same storyline. You see the growth, 5.1%, plus 2%. If you would compensate, if you would normalize for Ukraine, it would go to 17.3 and 12% growth in the quarter. Good growth numbers, and we expect to grow further in that sense. Same storyline, you see the flow. You can see also that the impact of FX compared to last year is significantly smaller in that sense. Going to our balance sheet, our debt position. As I mentioned, going back from 7 billion to net debt of 2 billion. A cash position of 630 million, in total at a center 260 million. Good to understand that all our operating companies are fully self-supporting. We don't send money from the center to our operating companies. Included in the numbers is our RCF cancellation. We repaid and cancelled our RCF. Very important step for ourselves, again, to optimize our debt position. And as you are aware, last month we asked for consent for our bonds to do with the delayed filing of our financials and also changing old for new bonds because of our bond position in the group ourselves. We've received overwhelming positive reactions on our bond consultation. And we would really like to thank you all because you've been part of the whole process. Great results, and happy that we were able to continue with the process and have been very successful in that sense. Lastly, I would like to share our strong balance sheet, but also the growth ambition we've got going forward. You'll see that, and we've mentioned before, you see that our net debt average leverage should go to below 1.5 times. With that good growth of the company, we really like to have a maturity of our debt longer than 4 years, 4.5, 5 years. Also that, we mentioned it before. And we think that our currency should be below 50% if you talk about the dollars. You know we are deleveraging. That means that as a group we deleverage, at the center we deleverage, and we are leveraging up in the operating companies. There we will increase our debt, reducing it at the center. So we have a total different mix in that sense if you compare dollars and local currencies. Repeating the ambition, as mentioned by Kaan, going forward, we feel very strong about the CAGR, 60-90% CAGR revenue in the coming years, and EBITDA around 20%. And we will do everything we can to deliver the 1 billion cash flow in 27. The overall combination of things that will help us focus on delivering the growth, on optimizing our balance sheet, deleveraging our balance sheet, and creating shareholder value in a way that will also be very helpful for yourself. Thank you very much. Thanks.
Thank you very much. You know, I love the way you simplified that we are a $11 million daily revenue company. Beautiful. We create $11 million revenues today, 5 million EBITDA, 1.5 million cash every single day. The question is, how do we make that 3 million a day? So looking forward to that. Thank you very much.
Thank you.